There is a crisis going on right now. If you own an office building in many of the cities around the country, and you have a mortgage, that at a 4.5% interest rate, and your building is getting emptied out as people don't need as much office space, and you're facing a refinancing at probably a 10% plus interest rate, if that capital is available at all, and in fact, you're probably not nearly as much capital in the building, you're going to see a lot of office buildings being turned back. I mean, there's been a structural change in how people work. What's interesting about real estate is it's one of the few businesses where people say you can kind of ignore depreciation, right? The concept in real estate is the metric that people use is net operating income, which is basically a pre-depreciation kind of number. The reality is, if you walk around New York City, there are buildings that are actually worth less. The land would be worth more if the building wasn't there, because the building is outmoded. It's not a place, ceilings are low, there's too much, you can't open the windows, there's not enough amenities, it's hard to redesign the building, and the building needs to be taken down. So I think there's a lot of fully depreciated office buildings that are going to be worth their accounting value. And I think the problem, I guess one of the good things is the big kind of money center banks really got out of, for the most part, lending to kind of traditional real estate developer investor types. The problem is that those loans went to kind of more regional banks. And regional banks do not have the wherewithal of the bigger banks. So I think you're going to see more regional bank failures, particularly ones that have kind of the big real estate exposure. What's interesting, though, about the office market, I used to say, people say, how's the real estate market doing? Well, it really depends, and it's a very market-centric business. Today, it's not just a market-centric business. It's if you want to just look at office, there's some office buildings in New York that are getting the higher rents, $300 a square foot, rents never before seen in New York, and then there are buildings you can't even give away the space. And so it's I think this is a moment where there's going to be a lot of white elephant type real estate that's going to end up in the hands of banks, will become land, or going to have to be repurposed to some other use. And I think that is a threat to the regional banking system. That's why my concern when Silicon Valley Bank went down is I don't think a world in which depositors take huge losses is going to be good. It would take down the rest of the regional banks, basically. You'd see this huge bank run globally. So I think we're going to have to manage through some bank failures.
But the systematic risk concerns?
I mean, I think it's manageable. I don't see that as the big black swan risk.
What about national debt in times of higher yield?
I think it's concerning. Look, when you look at leverage, you have to look at not just the liability side of the balance sheet, you have to look at the asset side of the balance sheet. And the asset side of the balance sheet, we still have a great country, and the government has some very valuable off-balance sheet assets, which include the ability to tax, right? So the U.S. government can, with the approval of Congress, unilaterally basically raise the percentage of an asset they own, including me, right? So if you think about personal income tax, right? So as the government makes adjustments, they're really just taking away assets from some people and giving assets to other people. So the problem, however, is as debt grows, there's only so much of that you can do before people exit, i.e. they find sort of other alternatives. And I do share some of the same concerns. Really Steve Mnuchin should have been doing, and Janet Yellen as well, is massively extending out maturities when rates were basically zero, and they were zero up until relatively recently. And instead, really both Treasury secretaries pretty much, and actually Yellen in particular, has kept the term of the federal borrowings at relatively short term. That is created, and the reason for that is that the short-term thinking of people in government. No one wants to be the Treasury secretary that cost, when you extend maturities out 30, 50, 100 years, which we should have done, generally you pay a higher premium, which means that the budget is less balanced, it's less money for the president to spend in terms of, in the Congress to spend. So I'm very concerned about the fact that in the next, 3 or 4 years, something like 35% of the debt gets repriced in what is likely to be a meaningfully higher interest rate environment. And that is going to be a big overhang. And when you borrow money as a country, you're really, taking away capital from future generations. And, our fiduciary responsibility as the adults is to look after the next generation. And this is a very short-sighted thing for us to do as a country, and the amount of federal spending, it doesn't seem like there's any end in sight, and there's no, used to be the Republican Party was the party of, conservative finance, and now really both parties have not proven themselves to be good stewards of the budgeting process. So I think it's concerning. The good news is that the asset side of the balance sheet is, we've got a lot of amazing assets here. We're still the best house in a bad neighborhood as a country. And so the best and brightest still want to come here, but we got to fix things like immigration policy and so on.